One of us goes wrong end of the stick. One of us busts. One of us got it wrong real quick.
Not saying it's you, not saying I've been tricked.
Real investment. Allow investors to gain exposure to real estate while retaining the liquidity of publicly traded stocks. They tend to pay above average dividends due to legal structures that require distribution of most taxable income. There are many types of trust: residential, retail, office, industrial, hospitality, data centers, cell towers. While these trusts traditionally offer high dividends and portfolio diversification, investors must examine the specific risks, sensitivity to interest rates, local and national economic health, sector-specific vulnerabilities, and leverage. It is crucial to consider tax implications and do thorough due diligence on each trust property portfolio, management quality, and capital structure. Potential threats to trust performance include rising interest rates, which increases borrowing costs and adds a burden to refinancing. Yes, the debt must be paid back or off to the lender the property goes. This has impacted office trust and those that lend and finance other office investors. Many trusts use leverage, borrowed capital to fund property acquisitions or expansion, which can boost returns during periods of economic growth, but heightens risk if interest rates rise or property values decline. 2025 is the debt challenged.
One of us goes wrong end of the stick. One of us busts. One of us got it wrong real quick.
Not saying it's you, not saying I've been tricked.